Welcome back to the channel. If you have been following this channel, you know we have been following the Stocks and Securities Limited, otherwise known as SSL fraud in Jamaica, from early. And this was long before we had the arrests, the charges being brought, and long before the one-story person took hold. Now, following raids and arrests carried out on December 27th by the authorities and reporting by the Jamaica Observer, we finally have a major development in the case. And here's the thing to understand from the outset. Charges tell us who law enforcement believes broke the law. They do not explain how the system allowed this to happen or why it wasn't stopped sooner. And here's why you should care about that. If a regulated investment firm can fail this badly, and we've had some financial debacles in Jamaica before, this is not new. And we're putting more stringent regulation to preclude this from happening or to catch it early if it happens. But if this investment firm can fail this badly, anyone's savings, their pensions, or investment is exposed unless the system actually protects people, not just watching paperwork. So today's show is about a few things. Where we were, where we are now, what these new arrests confirm, and still, are there still unanswered questions which one has to ponder? Now, the first thing it asks is, what was SSL? What's SSL all about? The official name is Stocks and Securities Limited. SSL is the acronym. It was a regulated investment firm. And investment firms all over the world, not just in Jamaica, they basically manage people money. You give them their money, you manage it. So SSL was a Jamaica investment firm. And I say in plain English, people gave SSL their money expecting three basic things. Their money be, one, improperly invested. Two, the money that you gave them and they invest will be properly recorded. So you have books and records that capture it and it's accurate. And three, the funds would be available when needed. That means, as I'm saying in Jamaica, when you want your money, you get it. And for years, SSL appeared to be legitimate. Polished branding, social credibility, trusted relationships. Even the Prime Minister had his money in SSL, so you know, said, well known. And critically, it operated inside a regulated financial system. It was overseen by the Financial Services Commission, whose charge and responsibility is to regulate these types of firms. As I said, even the Prime Minister of Jamaica had his funds in SSL. So if you're a Jamaican, and many Jamaicans believed this company is being watched, their money is protected and is safeguarded, and that belief was both in the firm, SSL, and the system. And this is central to the story. Now let's talk about the collapse. In early 2023, SSL collapsed. And it became clear from that collapse that a few things became very obvious. One, approximately $30 million was missing. Books and records could not be properly reconciled. That means you can't match up the numbers them correctly. I gave you $10, they say you have 5. They don't connect, they don't align. And investors could not access their funds. As I said previously, when I give you my funds as an investment firm, when I want my money back, I cannot get access to my money. And this not only included Usain Bolt, and this is why part of the reason why this becomes so prominent and so obvious, because he lost a lot, but also every Jamaican whose money, sometimes their life savings, was tied up in SSL. And at that moment, This stopped being a private business failure and became a national trust crisis, which means if you're investing in a financial institution in Jamaica and they are branded like SSL and they seem legit and the prime minister has their money there and you have this scandal, how do you feel safe with your money anywhere? Even in the traditional banks. Now, what's the core reality about this? Obviously, this seems to be systemic failure, not an isolated act. Now, early on, a simple narrative took hold. This was just one rogue employee, Gina and Panton. That explanation never really matched the actual loss or how this transpired. And in fact, I did a previous show when this first originated that talked about some of this. Large financial fraud usually requires some key factors: access to funds, access to systems, weak internal controls, and failures at multiple levels. And part of the whole construct is, are there mechanisms in place to make sure that your money is protected and that your money can't be stolen or defalcated? When losses are large and this prolonged, the issue is not just about who acted in it, but the question also arises, what structure was in place that allows this not only to happen, but to continue? This case was always about systems, not just about one employee or just individuals. Now, where are we now? As we saw from the Observer article, following coordinated raids by the Financial Investigative Division, these senior figures were arrested and charged: Ukroskery, Sarah Maney, and Zachary Hardy. The charges include breaches of the Securities Act, the Bank of Jamaica Act, the Bank Services Act, and the Larceny Act. And the Larceny Act is specifically around fraudulent inducing persons to invest. And I'll touch upon these a little bit more as we go through this discussion. SSL was charged as a company. As of this broadcast, as of us talking about this now, these matters are before the courts and no findings of guilt have yet been made. However, this development does confirm something very important. This was not the action of one isolated individual. It reflects breakdown at leadership and governance levels, exactly what many people suspected. And when this first came out, the discussion was, this is not a one-person act. There ought to be people involved. And in Jamaica, the normal view is that the people involved are too big to be touched. And at some point, this will blow away, because this happens in a number of instances. It spent time in the courts, it never get to an ultimate resolution, and people get away with this fraud. It's good to see the FID has arrested what it deems to be the alleged perpetrators of this fraud, along with the individual who was initially charged. But let me translate the breaches of these acts in plain English. When prosecutors cite the Securities Act, they're talking about alleged misleading or deceiving investors, failing to properly safeguard client funds, and keeping inaccurate or false records. And in summary, what that means is that you didn't give me all information when I invested with you. You gave me wrong information. You didn't keep my funds in a safe place to make sure when I need it, I can get it. And the records don't match. I gave you $10, you say you have $5, they don't match. So in simple terms, people may have been told their money was safe and accounted for when it wasn't. When they cite the Bank Act of Jamaica, they are dealing with alleged false or misleading information provided to regulators, so the FSC in this case, or the Bank of Jamaica, or conduct that undermined proper regulatory supervision. In plain English, regulators may not have been seeing the real picture in real time because they weren't provided updated information or correct information by SSL. And finally, when they cite the Bank Services Act, they are addressing conduct that look like banking activity. So you're doing transaction, but it looks like you're operating like a bank. You promise access or liquidity so I can get my money when I want it. And the money is mobile. And without the protection, so you're operating without the protection that banking law requires. Put together, all these allegations are not about paperwork or mistakes or just plain fraud, frankly. They're about governance. They're about accountability. They're about control failures. And they're also about institutional responsibility or lack thereof. Which brings us directly to the regulators, because they're supposed to be the guardian and protectors of those investors. So where were they? The Financial Services Commission, or the FSC, reviewed SSL and identified issues. That point is not in dispute. So the question is not whether problems were seen. The real question is this: what was done once those problems were identified? Because decisive regulatory action could include 1, suspending operations of SSL. 2, restricting new client funds. If there's problem, you want to make sure people who are coming in, existing clients or new clients, don't put their money in. Issuing public warnings, telling the public something's wrong with the institution, we can't continue, there are problems, you can't invest with them. Or forcing the company to make structural changes or structural corrections. If red flags are identified and the firm continues to operate, continues to attract clients, and continue to project that they're legitimate and they're doing things appropriately, the regulation then becomes procedural, not protective. If you are the regulators and you're charged with protecting clients and you find issues and you don't get them fixed or corrected, or you don't want the public there's issues, then you're accountable. You're part of the problem. And when protection fails, ordinary investors bear the losses, not the regulators. The gap between knowledge and enforcement sits at the center of this scandal. And the regulators are very culpable when it comes to what transpired and failed in not protecting the investors. Now, here's one thing that happened. And I heard another YouTuber talk about this. He said the person who got out, I'm going to put in my word, I basically had ESP. So these are the inferred or indicated. Here's a question Jamaica can understand. When a system is under stress, who gets information first and who doesn't? It is publicly known that the Prime Minister of Jamaica exited the investment before the collapse. It's not about accusation or motive, It's about transparency and fairness. The public deserve clear answers on 1, who exited. Was it only the Prime Minister or other individuals? Were they all connected? When did they get out? What information was available at that time? And who provided information so they can get out? And if they get out, why wouldn't they have raised the alarm? This is the Prime Minister of Jamaica. He is the moral compass of the country. So if he got out, which means there must have been a problem when he got out, why wouldn't the public be informed and this be addressed? And here's the question: when did he get out? Was it a year ago? Was it 6 months? Was it 5 months? Because this problem was allowed to continue. Markets only function well when information flows fairly. When information is uneven, truth breaks down, and it breaks down fast. And here's another point. If you go to most of the industrialized world, they have something called insider information. And they want to make sure they protect their markets. Because when you lose trust in markets, the markets can't really operate. And insider information is you can't have information which is generally known to the public and use that information to benefit yourself. I would love to see what FSC, when they do the investigation, how that works as to those people who got out and who provided information. And why didn't they go forward as something was wrong? Now, if we think about Usain Bolt and the system, Usain Bolt case masters, not because he's famous, but because it shows how even the most resourced and revered person can be failed by the system. He relied on advisors and others who had the right reputation and regulation to invest his money to protect his money. When that truth fails, confidence erodes for everyone at every level. People say, if that happened to Usain Bolt, it can happen to any one of us. Now, this kind of thing does not only happen in loosely regulated environment or in places like Jamaica. Some people say, this only happened because Jamaica don't have good laws and they have connection. No, that's not true. I bring you to a case of Bernie Madoff, who committed the biggest Ponzi scheme fraud in the history of financial services to the tune of 65 billion US dollars. Bernie Madoff had an investment company. There were regulators, there were auditors, and they had sophisticated investors. His fraud, as I mentioned, was the largest Ponzi scheme ever. You imagine this, 65 billion US dollars. You have to multiply that by 155 to get to the number in Jamaican dollars. Oversight existed at a regulatory level, but oversight without action is not protection. Now, I'll just tell you my personal Bernie Madoff type of story a little bit. When you are a regulator or you're a firm or individual that invests in a company, you have to do what I call real due diligence. I'm a CPA by trade and I did internal audit. I worked at a global banking investment firm. And where I worked, I had global responsibility for audits of our investment management business. And it was $1 trillion business. We managed over $1 trillion for clients. The firm not only managed money for clients directly, it also had what he called a manager of manager strategies, which is we would take client money, we would manage some of it, and would farm some out to other managers. Now, we would do due diligence on those managers to make sure we understand where the money was going, what the investment strategy was, how the money was protected. We declined Bernie Madoff. So that $65 billion, our client money, didn't get to Madoff. You may ask why? Because real due diligence look for some key factors. One, concentration of power. Does one person in the organization have too much power? Can he or she make decisions which can override the entirety of systems and process and what is done? Independent risk management. Now, risk management can sometimes be sophisticated, but the people who invest the money are the persons with similar capabilities to review what they do and get comfortable with it and make sure they're not taking undue risk. Independent reconciliations. When you reconcile the books and records, the person who controls the money, are they doing their own reconciliation or do you have somebody independent of doing it? Real compliance authority. In a lot of these firms, they have what they call a compliance department. They may have a compliance and an audit department. Bernie Madoff didn't have an internal audit. He had an external auditor. But internal compliance department, especially for a regulated entity, they look at, are you adhering to internal policy and procedures? What those policy and procedures entail? Do they protect the firm and clients? They look at the regulations that govern that business. And in some of these firms, there's a lot of different regulations and different regulators. They make sure those are being adhered to. And you're operating within the requirements of the regulations and your firm own requirements. So you look to make sure they have one of those. And you look to make sure the people and the processes are satisfactory. We also look for another key factor, separation of duties. Is the person who controls the money making the investment decision? So you should buy this stock. Is that person also be able to move the assets? So they move the money from one account to the next. And they also the same person who reconcile the records. If they're doing all three, then it's easy for them to commit fraud. If they're separated, it's very difficult. I wouldn't say it's impossible unless you have collusion for the fraud to occur. For everyday investors, here are simple red flags to watch for. Statements that are hard to understand or delayed. You're not getting statements on time, or when you read them, you can't understand them. The return on your investment that doesn't vary with market conditions. That was one of the key things of Bernie Madoff that we looked at when we were trying to invest with him. He had constant return over years and years, and no one has that predictability to be able to ascertain markets and be able to be constant double-digit return year after year after year. That should be your first red flag. Nobody's that good. I don't care how smart they are. because market conditions change, and sometimes your investment strategy may not align with the market enough for you to have those returns on a consistent basis year after year after year. And you have difficulty getting clear answers to basic questions. What's your compliance department? What does the compliance department do? How you reconcile the books and records? What's your investment strategy? How do you get all this return year after year? What's your investment methodology? What factors do you utilize to make informed decision about when you invest? You ask questions and you expect straightforward answers to those questions. If you don't understand how your money is making money, if you don't understand how your money is making money, that's a risk signal. You should have some basic knowledge of markets and how it works, how your money is going to be invested before you give somebody your hard-earned money to manage. Now, here's the final question that matters. If the same people, as I mentioned before, control the money, control the records, and oversee themselves, fraud is easier to commit and harder to detect. You add greed to that, and fraud becomes likely, very easy. And the question victims care about most is this: will anyone realistically get their money back? Or are they being prepared for a total loss? Will Usain Bolt get his money back? What will happen? Arrest does matter. It's good to arrest the perpetrators. But justice also means asset recovery. And asset recovery entails making sure that if you don't get back your entire amount of money you lost, you get back a significant portion of it. The money must have gone someplace. Going forward, real reform means faster regulatory enforcement, clearer public disclosures, and consequences that occur before money disappears, not after. Because if systems that watch the fire never explain why it didn't act sooner, we're not fixing the problem. We're just waiting for the next collapse. I find it very difficult to understand why a regulator would identify all these problems and doesn't take decisive action to remedy it. How did you allow this firm to continue operating and create an environment where it was trusted, leaned upon, leveraged, and utilized by the everyday person? And now we're in a reactive mode trying to identify what was wrong, when it occurred, and who should be prosecuted. And the investors in the company, a lot of them have no idea if they're going to recoup their hard-earned money, their hard investment. And the public should demand of the FSC what happened, why it happened, where were you, why didn't you prevent this from, if you couldn't prevent it, because it may have been happening, why didn't you mitigate it before it became a real problem? I'm Cranky. Stay vigilant. Share information. Please subscribe, like, and share. As usual, peace out.